Friday, May 23rd, market analysis. Stan Ehrlich, good morning. We got a 3-day weekend in front of us. And I've mentioned many times that this makes those kinds of Fridays like today possibly a bit more volatile, which is not really happening, at least after the opening, which was down a lot. So what do we have? Market that bottomed out in early April, oversold conditions, big break, and we did get a bullish engulfing green bicycle. Markets worked back up into the approximate price range, which was November, December, January, February, where it topped out before with a double or triple top. Got overbought. Unfortunately, I didn't get any red bearish engulfing sell signals and has started, and I stress that word, I think it's not over by any means, to come down. And that was basically Wednesday when it broke down out of an approximate, little better on some indexes and other sideways trading range, or a little bit of an upward slant. But nevertheless, Wednesday is the day it made new lows and new low closes below many previous days. Follow through yesterday was minuscule, if not at all, but there was no reversals and nothing particularly important. Just starting to come down out of overbought conditions in the indexes overall. Today, we opened very sharply lower at 6:30 with the normal opening New York Stock Exchange timetable, California time, and of course 1 o'clock is a basic close, traditional close. Sharply lower. Overnight, the E-mini was relatively stable, but at 4:30 approximately in the morning, California time, it fell apart and dropped off around 10 points lower. Now that is obviously a very sharp break. By the time the market opens, it wasn't down quite that much. So the spider opened, I don't know, what was it, 5, 6 lower maybe, which is not small, but we'll see in a moment. We've come back pretty good, and the 1-minute chart shows a series of higher highs and higher lows since the bottom around 5:17 a.m. California time. But the rally is only coming back up to and still underneath the previous lows for the last several days when the market had held on the downside and then popped back up again, somewhat, and then finally today, kaboom, broke it. And normally you would consider coming back up to about those prices, and here we are. So frankly, I don't see too much more strength. Maybe before the day is out, 58.49, call it 58.50, or even a hair under that. Yeah, I'm going to say a little more accurately, 58.43, but what the heck? In that ballpark. And then down again. I wouldn't be surprised if we would make new lows for the whole session. Next, here's the SPY. Opened essentially on the low, closing part of a previous gap from a couple of weeks ago, but also hitting a support line that I had drawn in, the yellow dashed line. So the beginning of support and a support level, kind of the same thing, sort of, caused the market to bottom out. Fine, no problem. Remember, there's a big gap to close between today's high so far and the low of yesterday, so that would not surprise me if it came all the way back to yesterday's low. I have to say that's not out of the question at all, but I don't think you're going to see much more follow through, and I do think it's going to close badly. There has been some damage done here, and it's a little bit longer and longer term basis so far. I'm still looking for the gap to get closed, and that's 55.67. And as I've been saying, I do not rule out 550 to 549 and possibly a little lower than that. We'll see how it handles this particular big gap closure. Next is the 1-minute chart for the spider opening at 6:30, basically on its low, zigzagging its way up so far. Maybe it'll get up to yesterday's low right in here, but I just don't see much more. Now, Qs, and it doesn't have to happen today. And I do think there's a decent chance you're going to see new lows to move down today. QQQ. It also opens at 6:30, of course, and opened at the low of the day almost, and also closed a small gap that we had from, what's that, 2 weeks ago, and I'll draw it right over there to today, and that's as far as it goes. We're closed. Now, there's another gap that gets closed around 491.5. So that's down another leg. Not really profound long-term support at any one particular level, frankly. But the next stopping point would be 483.80-ish in the zone of down to 474. And I'm not ruling out something lower, but I won't talk about that because I need to see how it comes down into that area to begin with, if it does. QQQ. Well, no new high yet. Zigzagging its way up. Not even up to the low of a couple days ago. So we'll see if it can have a little bit more strength. And here's the NASDAQ. Remember, it's the futures contracts, and it's open 23 hours a day. Therefore, gaps are very rare. And they usually, if they happen, over the weekends, if they happen. So we do have a gap down below here on the NQ. And that would be at 20,375 or down to the gap closure, rather, at 20,300. That's good enough. I don't mean to be too damn exact. There's no point in that as long as you come super close, a couple of percent maybe. Then you got a really good support area at 19,662-ish and quite a bit lower. So we're on our way, in my opinion. The only thing that's going to change my mind is to have a very strong close, which would be up higher than the previous close. That's yesterday's close. And wow, I would be definitely surprised if it was able to close above yesterday's high for a bullish engulfing. Now, it won't be a ER buy signal, but it'll be an outside up day or engulfing bullish candlestick, which normally would push prices higher. I don't expect that at all. Frankly, we might even have seen the high already, but I'm not sure about that. Next chart is the 1-minute NASDAQ, and it has come back up to the first little resistance level that I would have expected, and that would be the low of 2 days ago, plus a little bit more. Looks like most of the resistance, frankly, is in the ballpark of 21,135-ish. But, there's a little layer here. There's not any exact number that pops out. Next chart, we got the Dow Jones, YM. Came down to a support area, and the process did close an old gap here. So I am now going to bring that over to today, and boom, it's done. So it also dropped off even more to a support level. And I've had this on my charts for I don't know how many weeks or months. And it stopped cold turkey. Coming back fairly nicely, but again, just don't have any faith in it. Okay, we got the YM 1-minute chart. It has also come back up to the beginning of resistance, plus a little bit more. And I can expect maybe even a little bit more, but I stress a little bit. Next, we've got the Russell. Doing kind of the best of all the indexes, but it's another animal. It's not quite the same. It dropped off to support, broke below it a little bit, turned around, and now is very modestly lower on the day. And it is the only one that is very close to making a potential bullish engulfing. If it made a new high for the session, it would probably be making a new high, which is very close, from yesterday's high, and that would be an outside up day or bullish engulfing. That would imply it could come back into this resistance area again, 2082 up to ish 2125. I doubt it. Next, the Russell 1 minute. Wow, yeah, this is at the best resistance area I can come up with for the last 2 days of a little more than 2 days, 2.5 days of trading range. It's right there right now. Bonds broke previous lows yesterday, and that low was a bullish engulfing buy signal at the very bottom of the market, January 14th, for bonds. but it didn't stay below the previous low in January. It closed not only higher than that low, but also higher than the previous day's close and higher on the day, therefore. That's quite constructive considering it was also oversold at the same time. So we do have a follow-through bounce today that's nice, not great. And I really don't have any confidence in this at all yet. I suppose we'd have to come up to approximately 114, maybe stall out a little bit and start to close above that before I'm going to start talking about 117, 120, 121, stuff like that. There's just too much resistance above. The market didn't hold. You have, with yesterday's action, in my opinion, a little bit of a buy signal. Now, there's always a chance it could turn into something much more profound, but I don't see that. Notes, close cousin of the same conversation. Test of lows, not necessarily a new low, and if it is, it's only by a tick. Higher close, little follow through, nothing special. Tested resistance on today's high. Neutral to bearish, frankly, like bonds at the moment. Gotta be. Next, we have crude oil with an outside up day, bullish engulfing at the moment. All it has to do is stay higher than yesterday's close, in my opinion. Then we're going to probably, excuse me, work our way up again to 64, which I now think looks quite likely. So what we got is the support area around 61 holding, even though we got below it a little bit. It is now popped back up into that support resistance zone between 61 and 64. So I'm looking for 64. Next, natural gas. Unbelievable. So far, my story about this little head and shoulder, well, it's not all that little, head and shoulder top formation, it started on December 30th. Okay, let's call it the beginning of the year. And that's a little pimple on the left shoulder. That's really the left shoulder. I actually should put a marking across that 2 or 3 week period. Okay, the top of the market by itself was a small head and shoulder top that it took about a month and a half to form, and it already worked past tense. There's the neckline, the breakout, the test of the neckline from underneath, and then a false buy signal that didn't work on the way down, and then finally it reached its minimum downside objective, got oversold, and turned around. Now that establishes the pivot point for the neckline, and it did rally for 2 or 3 weeks, almost up to exactly the price that you might be able to forecast months ago, because the first shoulder high was almost exactly that same price. There is a lot of symmetrical cycles in head and shoulder patterns. This one happens to be on a scale of 1 to 10. I'll give it a 9, maybe a 9.5. The amount of time from the first shoulder high to the head of the formation, you want to take that amount of time, whether it be hours, days, weeks, months, and maybe years, unlikely, and measure the same amount of time from the head of the formation you think it might be the head into the future, and you come up with just a few days earlier than the market actually topped out, which was on May 12th. I have about May 7th that I forecasted, and it's because of this line right here, because that line is measuring the distance from the highest high over here on the left to the high head and shoulder, and then forecasting right here. Yep, May 6, 7, and just a few days later, at the right price, no less, it topped out. Came down to the neckline, bounced, because there's your pimple on the last shoulder. Again, I could draw a little marking across this combination, and we started to come down yesterday. Unbelievable. Now, today, at the moment, we're up a little bit, and so far, so good. I really find it highly rare that this, if it does work correctly, is about to do this. One of these days in the near future, like today or early next week, which is a 4-day week, we should break below these two lines, and there's slightly two different possible necklines, but they're very close together, and it's not going to really matter, and smash below them real fast, real sharp, big volume, blah, blah, probably get down to this little support level of 2.834 or maybe even 2.730 and even lower. The point is the downside breakout should be sharp, big, volume, large range, and then maybe one more day down after that, soon to bounce back up to resistance, which would be the necklines, or maybe only halfway up, and then another new low. You know, this forecast's a little bit below 1, and so far it's just working right out of a textbook. Almost every day I've come up with something that came true in the next, I don't know, hours, couple of days, whatever. Now next, heating oil. Well, we're kind of between a rock and a hard spot at the moment. Fairly obviously, the longer-term situation looks bearish. You've got the lower highs. You've got a little bit lower lows. Even since January, you've got a peak, a top of some significance. But after that, you get lower highs, and lower highs, and basically lower lows, except for the last couple of buy signals. We got one on the bottom, and then we got one on May 8th. So a couple of big rallies after those signals. Now, not really sure here. I probably should be looking for slightly lower levels. And that's because the trend is your friend. The overall is down, intermediate, a little questionable, but we're at a support level. So it could get stuck in here a little bit. But today's low is a new low. And it's not like it's turned around a big deal. It's barely higher on the day. I don't know, looking for lower levels. I'll just generalize like that. Next, we have gold, silver, platinum, which has had a big ride in platinum, and copper. Now, gold is rallying back up toward this bear trend line. I'm not sure I trust the trend line very much. It's just a brand new trend line. You need 2 points to begin with to draw any trend line. It would be nice to see it stop on the third one, like now, and or a fourth attempt to really prove the legitimacy of the trend line, because, you know, they're hard to make. When you draw them initially, is it really going to be a good one? So proof is in the pudding here pretty much now. Are we close to overbought? No. That implies you could break it pretty easily. We'll see. My opinion is at the moment that gold could come up a little bit more. You see, this trend line started with that low, and then it passed the test and passed the test again. This one doesn't have any history of being particularly important yet. I wish we were close to overbought. Then I'd be a little bit more confident that the line would stop it, but not too sure. We could plow through this and even test the secondary highest high, 34.50, and maybe even make a new high for the whole damn trend. We'll see. I just don't have a lot of confidence at the moment, but up. Silver. Possible new high close today for a few weeks. Nice. No new highs. A little double top still persists at the moment. We are stuck between a rock and a hard spot. Mostly the rallies have been up at the top or a little bit above the resistance area and around the bottom of the support area or a little bit below, but they didn't trend after they were a little higher than or a little lower than. They got stuck back in the middle zone again. I favor up, but I need a little bit of a breakout. I need to close above, close above 34. Next, platinum has really skyrocketed. I think I mentioned a few days ago a reference to when the catalytic converter was invented, so to speak, and they discovered, of course, that platinum was a key substance to eliminate a lot of the vehicle air pollution. Nevertheless, and that's why you get a lot of mufflers stolen. Okay, so we're at the resistance level right now. We have a new high for the trend up, but we are quite overbought, not to be ignored, not any shape or form. We've got up to almost 85. Now, you know that if we get up to 90 or higher, I scream bloody murder that we're within minutes or hours or a day of topping out. I can't say that yet, but this is very high, very big warning. We are flirting with the potential close above resistance, but if it stays here or goes down a little bit, especially if it closed below yesterday's close, which wouldn't be that difficult, we might just have a short-term top. I'm looking for a high. Copper. Finally, the damn thing pops up, breaks out from a little bit of a trading range. So I guess I'm looking for 4.9 plus and a test of these highs at 4.97. Yep. Pointing out, we did get a great buy signal way back here, April 9th. Whenever you see a green bar or a red bar, that's an ER, bullish or bearish engulfing buy or sell signal. They can last only a few days sometimes, or many months, alluding to, of course, a big move. Now, it depends on how you handle the signals totally as to whether you're in them for only a few days or a few hours or a few months. But the point is the red and green are frequently at the top and bottom. Day. All right. Big sideways trading range in soybeans and an attempt to break out failed. We have a higher high for several days, but now we're quite lower. And we could even have a bearish engulfing, maybe, but not quite. I look for probably a dribble back down to about 1045. And then I have to find out whether this thing is going to break that support area or not. If it starts closing below 1035, we probably have another significant leg down to 1008, 10, maybe even a hair lower. These grains are giving me a real problem about talking about a long-term bottom formation, which in some cases, not as many as we had months ago, look pretty good. Beans look okay. Soybean oil broke the neckline on the head and shoulder bottom on the 14th of May and failed immediately. And now it's failing to come right back up and break out and say, forgive me for dropping below the neckline. I still like my pattern. I'm going up. Nope, that's not it. It's been a week now fooling around below the neckline, so I have to stop talking about a head and shoulder bottom, which was it before a double shoulder head and shoulder bottom. Everything looked great until this one day, May 15th. And we haven't recovered. And now I'm kind of expecting a little below 48 around the corner next week. And maybe it's going to dribble all the way back down to 44.5. Next chart. We just can't seem to do the job here in soybean meal. Resistance stopped the rally yesterday, closing right at the bottom of it today. The high of the day is at resistance, stopping around unchanged from yesterday, and now it's down on the day some. It's a doji, but there's no strength. I haven't got any follow through to the upside. It came up from this low, which is a possible double bottom, and that's true. Failed right where it should have at the resistance level, and it's coming down today. Now I'm thinking 290 is going to go bye-bye, and we're going to start closing in the 280s soon. Corn. I'm sorry to say that the pattern also looked really great in corn for weeks and weeks, and finally, a couple of weeks ago, it dropped too low for too long a period of time instead of bottoming out when it should have. So we got oversold at a support area and popped back up. Yeah, reasonable amount. Could have been a little bit more. Maybe still could be. But I just can't justify a big long-term bottom at this particular point. So I think there's a chance that it could come back down to this support level again, maybe in a week. 438, there you go. A little bit bearish in grain again. Well, what about wheat? I'm sorry, it is the same damn story. It made new lows to the trend, simply got oversold, came back up to the resistance area on Wednesday, and started to drop yesterday and today. I'm looking for a test of the lows. I can't help it. Cattle, we got a great sell signal on the top. It's a doji today, slightly higher or lower on the day. Well, it's around unchanged. And the point is, it's not going anywhere. I think it's going to top out. There is a tiny I think it's 3 ticks gap from yesterday's low to Wednesday's high. That's awful small. I'm not even sure it's particularly important to mention so small, but it is there. Anyway, I'm looking for lower levels. A test of 205. Next stop on the downside, 202. And then the best support level is going to be about 199-ish. Next, Miss Piggy, testing support, not quite oversold, might break the support level. And it does start closing below 100. Then we could see a lot more lower levels after that. But right now, and I'm going to ignore that. Right now, we're at support. We're not oversold. And I think there's a minor chance it could bottom out and start to rally back up again. But if it closes below 100.4, then you should see a very sharp break, probably down to 98, 97. Next, we're looking at Shell. Small gap to close on yesterday's downside gap. I'm not expecting a lot of up or down movement out of this real soon. I am proud of the fact that we did get a buy signal at the very bottom of the market back on April 9th. But, you know, an old gap above the market is partially closed. It's actually a little bit of a double gap. And we're dribbling off a little bit. I wouldn't be surprised to see a test 63, something like that. 64, 63. Next, we've got Apple, which tried and did break out of a head and shoulder bottom that was fairly small. First shoulder low was, but not anymore, March 13th. Then we had the low day, April 8th, and then on May 7th. So this is a tiny bit less than 2 months. Last shoulder low, it went up to the neckline, all is peachy keen, closed on the line, broke it, closed above it, breakout day. No major zip, pop, bang breakout. A little suspicious. Stayed above the neckline. That's okay. Next day, did the same thing. Stayed above the neckline. And the next day, it did the same thing, but no new high. You know, there's supposed to be, usually is, again, some kind of very substantial rally all of a sudden for the breakout, then a retracement. Well, we got no big rally, but we did get the retracement, and then all of a sudden, we start dribbling back below the neckline, although on the 19th of this month, what was that, Monday, it managed to close on the line, but it squeaked below Tuesday, the 20th, and then it just plain dropped, fell apart. On Wednesday, the 21st, killed the pattern, no ifs, ands, or buts about it, no head and shoulder bottom. I left the neckline in because they are trend lines of sorts. And it dropped off more yesterday and more today with a downside gap, and now is oversold at previous lows that used to be the last shoulder, May 7th. But that's important. You got a gap to close a little bit above the market, and now you're oversold and at a little bit of support, an old low. Kind of a couple of old lows. Now there's a good chance that the low today could hold, but all we're going to do is come back up to 199.5, close the gap, and that's only $3 higher. It could do it today and go right back down, for that matter. I can't call this any kind of a major bottom, but I realize you got support, double bottom, oversold, gapping down. I really wouldn't call that a downside exhaustion gap. There's not that big a move beforehand. Next, Tesla, sideways, doji, gap to close below the market, possibilities, don't forget that, and then you don't get major support until you get down to 291. I'm not ruling that out. New highs for the trend up. I suppose that's possible also. So we're just going sideways here for damn near 2 weeks, a week and a half. I'm going to wait. No comment. We're back to the E-mini. Well, no, not yet. Carvana. Doing pretty good. Possible new high close, but not above 2 previous important highs. So we really need to get going if you're going to get above those highs on a closing basis, above 312, to get some zip, pop, bang rally going to probably 20 or 30 on the way up, 320, 330. But, you know, there's a little trouble here. We were overbought pretty darn good. This one got up to 91, and that was on the day of May 8th. It dropped for 2 days sharply, trying to come back, and it did close the gap very accurately, and then jumped to new highs. So we end up with a divergence, higher high in price, not in the indicator, and it did pull back, but not very much. This is fairly strong. I'm not sure we're going to come back down again. You just have to keep going at this point. You can't stall out right here. E-mini. Let's take a look at the quick few 1 minute charts. Okay, it got up to that resistance level or the beginning of it. Possible high here, 58.36 on this rally. Starting to hit resistance. I'm not gonna rule out 58.48 next. Not quite good enough for the spider, but getting close to closing the gap. See, spider goes up a little more. E-mini could do the same. We'll see what happens. Okay. Wow, it touched it. Yep. The more I look, the more I'm finding reasons to believe something's about to stop rallying here. Yep. Okay. Could have happened. You guys have a great day and profitable trading to you. Have a great 3-day weekend.